You're at the dealership, just inches away from driving off in your new car. The salesperson slides a form across the desk with a friendly smile and says, "Let's just get you pre-qualified for a loan." Immediately, a little warning bell goes off in your head. Is this simple, supposedly no-obligation step about to secretly tank your credit score right before a huge purchase? That fear is totally valid, and it stops a lot of people from taking what could be a really smart financial step. But what if I told you that hesitation is based on a massive misunderstanding? Today, we're clearing up that confusion for good. So, here's the short and simple answer. No. Getting pre-qualified for a loan or a credit card almost never affects your credit score. The relief is real, right? But to understand why it's safe, you need to know about the two different ways lenders check your credit. It all comes down to something called a soft pull versus a hard pull. Knowing the difference is the key to confidently taking control of your credit. Let's break it down. Think of your credit report like a library book. A soft pull, or soft inquiry, is like someone picking up that book, glancing at the back cover summary, and then putting it right back on the shelf. It's a light review. This kind of check happens all the time, often without you even knowing. When a lender pre-qualifies you for a mortgage, auto loan, or credit card, they're using a soft pull. This gives them a basic snapshot of your financial health to see if you're a good candidate for what they're offering. These soft pulls are only visible to you on your credit report, not to other lenders, and they have zero impact on your score. In fact, when you check your own credit score through a monitoring service, that's also just a soft pull. A hard pull, or hard inquiry, is the official checkout. This happens only when you formally apply for new credit. So after you've been pre-qualified and you decide, yes, I want this loan, you fill out the full application. At that point, the lender does a hard pull to take a much deeper look at your financial history. This does show up on your credit report and can cause your score to dip by a few points temporarily. Lenders see new hard inquiries as a sign that you're actively looking for new debt, which can make you seem like a slightly higher risk. So how does this actually work when you're out making big money moves? Let's rewind to that car dealership. When you get pre-qualified for an auto loan, the lender runs a soft inquiry to estimate what kind of loan you might get. This is awesome because you can get pre-qualified with several different banks or credit unions to see who has the best interest rate, and your credit score won't budge. The same is true for mortgages. You can shop around with multiple lenders to find the best deal without it hurting your credit. It's only when you've compared all your options, picked a lender, and said, okay, let's make it official, that the formal application and the hard pull actually happen. It's important to know that different scoring models treat multiple hard inquiries for the same type of loan, like a mortgage or auto loan, as a single event, as long as they happen within a short time frame, usually between 14 and 45 days. And what about all those "you're pre-approved" credit card offers you get in the mail? It's the exact same idea. The credit card company has already done a soft pull on your credit to see if you fit the general profile for one of their cards. They're just inviting you to apply. If you take them up on it and fill out the application, that's when the hard inquiry gets triggered. Once you understand this, pre-qualification goes from being something scary to being your most powerful tool. It's a completely risk-free way to shop around. You should absolutely get pre-qualified with multiple lenders before you decide on any major loan. It lets you compare interest rates and loan terms from a position of power, without the pressure of a ticking clock or a hit to your credit score. Just keep in mind that a pre-qualification isn't a 100% guarantee of approval. The lender still needs to verify all your details with a full application and a hard inquiry before giving you the final green light. But it's the smartest first move you can make. So, the next time a lender offers to pre-qualify you, you can say yes with confidence. You're not messing with your credit score. You're just arming yourself with the information you need to make the best possible financial decision. You're not just a borrower. You're a smart shopper, and that's a great place to be.